Hi traders, this very video is a complete tutorial on how to mark out and trade using key levels. Now, in this very video, first thing I'm going to teach you guys is what are key levels. The second thing is going to be how to mark out this key level. Then the third thing is now going to be how I personally trade using this key level. So I'm not going to waste time. Let's begin. So this right here is a gold chart, right? You can do this on any market, any currency pair, any crypto pair, literally any market you trade. What are these key level? Key level right? Key levels are support, of which I'm going to show you how to mark them out, right? But key levels are support, they are resistance, right? They act like a resistance to the market. Then they act like a demand. Now they act like a supply. Literally, all of these names now, I'm going to show you how they relate, right? They literally mean the same thing, right? Now, how to mark these key levels are support, resistance, demand, supply, order blocks. I believe you know what order blocks are. So they are order blocks, and even sometimes they are breaker blocks. Now, these are what these key levels are. Majorly, these are what it is on a higher time frame. I'm going to show you everything. So key levels now, they are all of these: your resistance, support, point of interest, breaker block, order blocks, resistance, supply. And why do you need to mark out this very level, right? Why do you need to mark out this very level? You now know what it is. Why do you need to mark it out and then know and then start using it, right? First thing, why you mark out this level is this key level, they are where price is heading. So this key level now, they are literally where price is heading, where price can be going to. If price is going up, I can easily say, okay, this is the nearest key level, and this is a level where price is going to likely get to. So I now know where price is heading, meaning I can start looking out for buys till the price gets there. I'm going to show you everything. Then, if it's going down, I can look out for, okay, this is where price is heading, and I can start looking out for sell till the price gets there. Then the second reason you mark at this level is this key level are possible reversal zones. Now, why did I say possible reversal zone? Not all of these key level actually make the price reverse, right? At some point, it won't reverse at that very level. It will break out, it will violate it, right? So, but they are possible reversal zones. They are zones where price can actually reverse from. And I'm going to give you everything I need, how I go about these key levels, how I trade it. Now, you don't know what key levels are. Key levels now, first, they are your support, resistance, demand, supply, order blocks, and even breaker blocks, right? Then they are where price is likely heading. Where price is heading, price going up, I can expect price to get there. Secondly, price going down, I can expect it to get there. Then secondly, they are possible reversal zone, meaning on getting there, they can be reversal. Price can give a change of character and become bullish or reverse, right? Change from being bullish to bearish, bearish to bullish, right? Now, the second thing is how to mark out this key level. How do you now mark out this key level? You don't know the first thing, and the second thing, how do you mark out this key level? What I do is I do go to a higher time frame, and most likely this key level, they are always on a higher time frame, right? On a lower time frame, marking them out, I do call them POI. On a lower time frame, I do generally just call them POI on a lower time frame. But on a higher time frame, I tend to just refer to them as key level. Right? On a higher time frame, I tend to refer to them as key level. And how do you mark out this key level? Like I said, they are support, resistance, order blocks, breaker blocks, right? Supply, demand. Now, if you watch, this is how I mark out the key level generally. Price was going down at this very point. It got here, stopped here. This was where the body of the candle stopped before they started reversing, and this is where the long wick started coming out. So in this case, I will mark out the long wick as my key level. So where this long wick is now is my key level. I can easily use my box, my rectangle, to mark it out with a box as a major demand zone, as a zone where I can expect price to get to. Price is going down, I can expect to keep selling till it gets here. Then on getting here, I can expect reversal to happen. That means it's gonna give a change of character, start buying, right? So these are a mark key level. Once we have a long wick, I'm gonna mark it up. Now another one, this is another long wick right here on a higher time frame, majorly your 2-hour, 4-hour, and a daily time frame. I'm gonna give you the different time frame I use. Now on the higher time frame, this is a long wick right here. I can also mark out this long wick. I do love to use my horizontal line. I can mark out this long wick as my key level, right? So this is a key level I've marked out right here. Possible zone where price can easily sell and then gets to, and a possible zone where reversal can happen. Now in a case where there is no long wick, in a case I want to mark out key level but there's no long wick for me to mark out, I can mark out the other block at that very zone. Let me show you a case scenario where there's no long wick, right? Where no long wick actually formed, and in that case now, like I said, I can mark out the full order block. Let me show you a nice example so you can see what I'm saying. In this case now there's no long wick. This wick is not a long wick, it's just a tiny wick the price created. In this case, I can mark out this last bullish candle before a bearish move. This is the order block in this case, right? Just to make sure it's not that large, I'm using only the body of the candle, not marking out from the very beginning of the wick, right? Only the body of the candle, just to make sure it's not that large. So you can easily see this is also a key level. Now watch this other one closely. This is a long wick right here. This is a long wick, not a small wick. I can mark out the long wick and it's a key level. And if you watch closely, that's where the price actually got to and it started selling. So this is how you mark out this key level. Secondly, another way you can also mark out this level is using it as a breaker block, right? And this is a case where you can easily do this. A case where it's a long wick, right? And if you watch that very long wick, watch what happened with that long wick. That long wick formed. What happened? On the higher time frame, remember, that long wick formed. Immediately that long wick formed, now the candle dropped. Within that point now, there was some sort of indecision. Buyers were started stepping, but sellers were more aggressive. They push it down, but overall the candle ended to be a bullish candle. Now if you watch, the next candle that came out now just broke out. On a lower time frame, this reaction that just happened right here is like this. Is the price getting to a point, selling down, coming back there, then breaking out. Automatically, nobody needs to tell you that this is a resistance before. This is a previous resistance before, like a high as a resistance, but since the price has broken past it down, it's not like a support. It's not a support to the market. Same thing, it was a supply. Since the price broke past it's not a demand. Same thing with the order block and breaker block strategy. It was an order block for a sell, but price breaking past it, I can draw it out and it's now a breaker block. Now, this is a scenario that happened right here. This is a long wick that happened on a higher time frame. But with time, I'm going to master this. Just follow what I'm giving you. On the higher time frame, it's from this very long wick, then rejected, and that long wick, I can zoom it out, mark it out from the very beginning of the wick to the very bottom of where the wick stopped, then mark it out as my key level. Possible reversal zone. Now, like I said, you might not be able to just get this easily, right? It's going to take some time. Maybe once you are now understanding it, I'm going to show you what's going to make a key level valid or not. I'm just going to make sure I show you how to mark it out. This is another long wick, and I can also mark it out as a key level, right? So these are how you mark a key level on the market. And multiple opportunity, multiple price respecting this key level. This is another one right here. This is another one right here. This is a long wick. You can see the long wick, and that's where the price came to, respected and kept on going up. And if you watch, this is not like the key level for a breaker. I can mark it out now from the very beginning of the wick to the bottom. Can zoom it out. Price did not come back, just keep going up. So these are how you mark a key level. This is another one, key level. Now this is another one. This is a long wick, and that's where the price came to, started buying. So these are where key level are, and these are what key level are. I believe by now you now know how to mark out key levels, and you also now know what key levels are. Now the final thing is now how to trade this key level. It's not just about knowing it, how to now trade this key level. Now before I go on, these are a couple of trades I took using the same key level I'm going to teach you. Right, this is a continuation trade I took, and this very trade now gave me 10 RR. This was when I had the opportunity, the buy setup, and this was when it activated and started hitting full take profit. And this very trade now was a 1:10 RR. I was risking about $100 on this very trade, and it gave me about $1,000 profit. Right, it gave me about $1,000 profit on this very trade. Right now, this is another trade I took right here from on USDJPY. This is a setup when I had the setup, and this was when it's now activated, and this trade is full take profit. That trade gave me about 6 arrow on that very trade. Now, not all the opportunities are gonna go up, right? I'm gonna show you how I mark them out, how I trade them. You now know how I mark them out. It's not gonna be me showing you how I trade them. Some are not gonna go up. This is another one I tried taking on gold. Possible buy on the key level, and what happened? Stopped me out, right? Did not go as I was expecting. Now, before I go on, these are trades I took, and I also have a free Telegram where I drop free signals and free setup. I drop most of my setup for this very free Telegram. It's a free Telegram, and you can easily join. The link to join is in the description of this very video. Click on the link and you'll be redirected and you join. It's 100% free. And I also have a mentorship class where I teach students how to trade, right? Where I coach traders on becoming profitable. Right now, the link to join the mentorship class in the description, and the fee is about $40 in Naira. If you are paying in Naira, it's about 50,000 Naira. If you are paying in Nigeria currency. Now, once you make payments, you'll be added to my general group, and you'll be added to the multi-class group. So the link is in the description to join. That's by the way. Let's go on. Now, how do I now go over trade this key level? First thing I do, first you want to know from me is you want to know the different higher time frame I use. The different higher time frame are my 2-hour, 4-hour, and the daily time frame. These are the different time frame I use. I'm more of a day trader. If I'm a scalper, I'm using maybe a lesser time frame, right? But I'm more of a day trader, so I'm using this different time frame, right? If I'm a swing trader, I'll be using another different time frame. Now, on this different time frame, I want to mark out this key level, right? First thing, on this different time frame, that's where I mark out this key level. This is the different time frame I use in marking out and in trading this key level. Now, first thing I want to do in confirming this key level is valid and taking my trade from this very key level is gonna be, I want to make sure, this is also what you want to also apply. You want to make sure it aligns with 2 of desired time frame. HT, let me put it as HT, right? Make sure it's aligned with 2 of this higher time frame. Now, what this is this: once you're marking out key level on any of this time frame, maybe you're on a 4-hour time frame, or on a daily time frame, or on a 2-hour time frame, you want to make sure that once you mark it out on a single time frame, you go to a different time frame and let's see if it aligns. If it aligns at the same level, then that's a valid and a nice POI, a nice key level to actually start considering taking your trade from. Let me show you a nice example. On this very chart now, this is on a 4-hour time frame. And on the 4-hour time frame, if I mark out this long wick as a key level, you can see what I marked out. If I mark out this long wick as a key level now, it's not yet valid until, it's not a valid zone I can easily sell from. It's a key level, but it's not, the way I trade it is not a valid key level I can easily just take a sell from until it activates or it aligns with 2 of my higher time frame. So on the 4-hour time frame now, this was how it looks. Then if I go to 2-hour time frame, you can see how it looks, right? It's still aligning with the 2-hour time frame, pretty much aligning with 2 of my higher time frame. So daily time frame is not clear, it's not aligning, so I don't even need to consider it. So as far as it's aligning with 2 of my higher time frame, it's aligning with the 4-hour and the 2-hour time frame is a valid key level for a trade. It's a valid POI I can consider. Now, another thing you want to also watch out for, right, is this. That's one thing you need. Make sure it aligns with 2 of these higher time frame. That's what I do and that's what I consider. Then the second thing I want to look out for in taking trade or in trading with this key level is gonna be, it should have a close liquidity. Now, this is the second thing I consider. If I'm going to take a trade or consider buying, selling from this key level, it should have a close liquidity. There should be liquidity close to that very key level you've just marked out. If there's no liquidity close to that very key level, I don't always validate it. I don't always consider taking a trade from that very level. Now let me show you a nice example and you can easily understand what I'm doing. If I mark at this very key level now, on a lower time frame, there's gonna be an order block right there. And this case scenario now is when you now have a sniper entry. You now have a sniper entry, a much tight stop loss to take your trade. Now let's say I mark at this very key level. If I go to a lower time frame, I was on a higher time frame. Then if I go to a lower time frame, I'm going to have an actual order block around that very level. So I can mark out that actual order block. 15 minutes time frame now, there's no clear order block to mark out. Let's see how it looks on a 5 minutes time frame. So on a lower time frame, you're going to now have an actual order block. And that order block now will be aligning with that very key level, will be around where you mark out your key level. Now let me show you a nice example. Around here now we have this very order block. You can see this is another block we have right here. 5 minutes time frame order block is around, pretty much around the key level. And if you watch, if me personally, I'm going to mark out this very order block, I'm going to use this very candle right here, this very black candle right here for my order block, because it's the last candle before the sale started happening. So that's what I'm going to mark out. Then I'm going to zoom out to see if it has liquidity close to it. And what happened? It had this high as liquidity close to this very key level. So this is a valid key level I can consider taking a sell from. Why? Because it has liquidity and liquidity is close, right? It's not far from the key level, but it's close to the key level. So pretty much a valid key level I can easily take my trade from. And what happened? Price came, tap in, was almost took out the level, right? Took out the level probably for some inducements, for some liquidity, but eventually started dropping. Right now, with this, with you going to a lower time frame to mark out the order block, it's gonna make you have a tight stop loss, right? It's gonna make you have a tight stop loss, because stop loss will just be slightly above the order block. Then you can always target the next or the nearest key level. If I'm taking that very sell and I go to my higher time frame, and on my higher time frame I have another key level, I have another POI I mark out, another key level below. Like this case now, the nearest key level is this very one. Notice it, right? This is the nearest key level I can easily say where price is gonna likely get to. So this trade now is giving me about 6 RR, and then I take my trade. Same thing on this key level, you can easily say, let me watch out for confirmation, let me watch out for a change of character before you take your trade. This is a key level where the price goes to. Now let's see if this aligns with the way I trade it, and let's see if you would have taken this very trade, or if you would have taken this very buy. Right now, watch it closely. This is a long wick on a 4-hour time frame. Let's see how it looks on a 2-hour time frame. On 2-hour time frame, pretty much aligning. Now let's see if we go to a lower time frame, if it has liquidity close to this very key level. If it doesn't have liquidity, meaning that's not what we consider, that's not how we trade it. Now watch. This is a key level of which on a 15 minutes time frame now, like I told you, you can now mark it out. You can now mark it out as an order block. I can mark out this black candle right here as now an order block. But if you watch, there's no liquidity. Clearly, there's no liquidity close to this very key level. Right? So there's no chance of me taking buy from this very level. Why? Because there's no liquidity close to this very key level I've marked out. So with this now, maybe I watch out for a change of character, or me personally is not what I trade, because there's no liquidity close to this very level. So it's not what I trade. So it's already out and I won't buy from here. So let me show you multiple examples. Then you go over to your chart, apply the way I've given you. I've given you the different time frame I use, giving you how I approach it, then you just apply it. With this, I don't even look out for break of structure or wherever confirmation you need. But all I need is just my liquidity close to it, and then I take my trade. Remember, there are possible reversal zone. On getting there, you can easily watch out for a change of character. You can easily watch out for a change of character and then take your trade. Or you watch out for it to give some reaction for a change, right? Then you take your trade. Just like that. Now, but since I gave you how I go about it, if it aligns and it has liquidity protecting it, I'm gonna easily just set my limit order, and once it gets there, activate, and then I'm in on the trade, just like that. Now this is a key level on the 4-hour time frame. Let's see if it aligns on the 2-hour time frame. 2-hour time frame now pretty much the same level. You can see that the same level right there. Then let's go to our lower time frame to see if it has liquidity protecting it. So clearly there's no liquidity protecting it. That's why I didn't catch this very sale. But on getting there, what happened? It started dropping, right? So that's the reason I didn't catch that very sale, because there's no liquidity protecting it. I need liquidity protecting it to validate it, right? You're gonna see key level for buy, key level for sell, but you're gonna take only one, because one is gonna be the valid one. You can't be looking out for buy and at the same time be looking out for sell. Believe you are getting it. So pretty much that's how I go about it. And just go back to your chart, replicate what I've given you, see for yourself how it's going. And if this video was helpful, don't forget, give it a like and subscribe. And by the way, this is currently a trade I'm on gold. This was when I had the setup. It was a personal trade, I didn't drop it. This was when I had the buy setup right here. You can easily see, and now it's currently moving up some good profit, right? So let's see how the trade is gonna play out, and I'll see you guys in the next video. Take care, guys.